All right, so taking a look at stocks right now, big turnaround. We're pushing session highs right now. We're up 35 points, 24,870 on the Dow. I mean, again, huge turnaround after those Fed minutes. Talk about trade kind of easing. Some of those comments from Wang Yi. He was with Mike Pompeo today. We brought you that story early in the hour. All of this kind of brings more positive sentiment that folks can figure out what they're going to do, whether it comes to China or North Korea. I want to bring in Haverford Trust Chief Investment Officer Hank Smith, a good friend. He's got some stock picks that are going to, well, put a summer breeze behind your portfolio. Hank, I mean, real quick, this market turnaround today, pretty astonishing.
It certainly is, but it really is all about fundamentals. And in this case, inflation that's ticked up but is not running away. The market is digesting interest rates that have moved up, but they haven't spiked up. And trade. It looks like we're going to get through May and June and not have a trade war that escalates. And that was what the real fear for this market. So the fundamentals are intact. I don't think the market really cares too much about the geopolitical events. I know North Korea is getting a lot of headline news, but the market certainly didn't react to that in 2017, and I don't think it's going to react to those geopolitical events in 2018.
You know, we're approaching the holiday weekend, and after that, it is summertime, not officially, but it's summer trading time anyway, where a lot of the trading desks kind of start to empty out. What do you think is going to be a good catalyst for the summer? I know you're bullish, but what would really, do you think, be a good thing for the markets this summer versus a flat summer, which nobody really wants?
Right. Well, I think the big bullish catalyst is getting this headwind of trade uncertainty out of the way. And we should know in several weeks whether we're going to actually inflict tariffs and a tit for tat or whether we're going to have an agreement. And I think once that happens, this market moves higher just based on that uncertainty being relieved.
Well, let's talk about industrial stocks, because that's something that obviously is affected by trade and where we go with China and kind of this tit for tat, the tariff situation. So the industrial sector, now you like that group, but tell me why.
Oh, we definitely like that group. First of all, you have a synchronized global recovery, the likes of which we haven't seen in decades. The U.S. economy is almost leading the way. Plus, you have tax reform, the repatriation of earnings on the fiscal side, also increased spending. We haven't even gotten to infrastructure spending. That could be down the line. So I think it all plays into the industrial complex very nicely.
Yeah, we're looking at some of the industrials. You're looking at, we just showed it, Microsoft and Oracle, those new tech companies that you're watching. I know you're not a big fan of retail. Really quick before I let you go, Fed minutes came out at 2 p.m. Eastern time. What was your initial reaction?
Very positive. I don't think inflation is a concern. In other words, I don't think they're behind the curve in inflation. And one more thing, let's take the Fed at its word. And you've had several governors over the past several weeks say they are not going to invert the yield curve. And I think that is very important. So it is going to be a very gradual pace in terms of rising Fed funds rates. And the market will like that.
I got about 20 seconds, but real quick, inflation worries from you?
I don't think so. You really have to see wage inflation get north of 3.5%,
right,
approaching 4% before that becomes a problem, and we're nowhere near that. And the biggest issue there is demographics are in the favor of low inflation.